Bitcoin is bouncing off of expected levels. Tesla is charging up for some sort of move here going into the earnings tomorrow. So Luna has been on a tear for us as our Lotto play along with Dogecoin. We're going to talk about those as well as a couple of the Bitcoin miners that were particularly interesting so far this week. But first, let's look at Bitcoin. So today, Bitcoin came down to touch our line right here at 66.5, 66.580 to be exact. It basically came down and touched our line to perfection. I love TA. It is going so well here in terms of that. So let's take a look here. As long as we hold 66.5, I can see Bitcoin continuing to charge up. Now, there's a bit of a fly in the ointment here. For this, we are below the 5-day moving average. We are making a doji down here in the bottom half of this big bearish engulfing candle. That isn't good. Those things aren't good. Now, I am thinking we might come below the 66.5 level, but if we do, I do think we're going to get caught at 65,000 at the 21-day moving average. I think the absolute worst case scenario is we come down to the 50 and 200-day down at 63,000. Any lower than that, and we're going to be having a really bad time. I don't think we're going to get that low on this thing. Honestly, I think 66.5 will struggle to break, so we'll probably hold that unless we get some big volatility going into the election here. Now you may notice at the bottom of my chart here, this is a little different here. It's actually not. All right, it's actually not. It's the same stochastic momentum indicator I was using before. I just turned it into ribbons so it's easier to look at. You can see here pink and like this purplish color means that things are coming down, that it's crossed over to a negative way, and yellow and green mean that it has crossed over, the lines have crossed over in a positive way. And as you can see here, when they pinch, which they did right here, September 29th, and opened up to the pink and purple, it came down. And then same thing on the opposite side when it pinched down there at the bottom, at least on the pink and yellow one, kind of went up a little bit, did it one more time, but this one was still opening up, so fell. And then we did it one more time, third time down here at the bottom, pinched again, boop, went up. Anyways, this is just showing the momentum on a stochastic. I just changed it to look like ribbons so it was easier to visually look at quickly. I was getting kind of tired of deciphering the spaghetti and decided I wanted it color coded and I wanted it ribbons and I wanted it to like just be easy at a glance to look at and go, oh, things look bullish, oh, things look bearish based on momentum. That's all I wanted to do with that one right there. And if you're wondering what that is, it is a custom indicator. It's one that I coded. I've had trouble trying to release my indicators on TradingView in the past. It hasn't allowed me to. They keep denying them. They're very kind of a frustrating platform to develop indicators on, not in terms of for yourself, but if you want to share it, because they're just very strict about it. So I don't know if you'll be able to get this one. Perhaps at some point in time in the future, I'll have a Patreon with these things where you can just download them and install them yourselves easily. We'll see. I've toyed with the idea. We'll see about it in the future. Not at this time, but comment down below if that's something you're interested in, though, and let me know that it's like worth bothering. Anyways, so right now we are going into some negativity here on the stochastics. You can see that on this other momentum histogram here, you can see that we are making lower highs, so that's not good either. I do think that we are not finished with the 66.5 yet. I think we're probably going to come down to it, and if we go again, and if we come down to like a 2 hour here, yeah, you can see what's going on here. So on a 2 hour, things are kind of coming up, but look what they're doing. That's a rising wedge right there. Let's draw this. Got this right there. That's a rising wedge right there on the 2 hour, and if that were to break, it would come right back down to the 66.5. So that is something to be aware of and watch out for on Bitcoin. So I don't think we're done with 66.5. We might not be done with 65,000 potentially as we go into this week and next week for the election. Leading into the election, we might see that volatility dip into a rip. We've been talking about this for a while, so hopefully everyone is prepared and nobody's scared. All right, let's move on to Tesla. All right, Tesla. This is an hourly chart that I've got up on Tesla right now. Okay, let me get rid of all this side stuff. Okay, hourly chart on Tesla. We had that huge drop from the robot event, from the We Robot event. Huge drop. It was like 6-7%. That was nuts. That was a bad drop. Okay, and it continued to drop a little bit further as some more information came out about that event, in that some of the robots were being driven by people and not AI. Some people didn't like that, felt like a misrepresentation, though honestly, it was the tech is impressive. Even if it wasn't being driven by AI, I can kind of see why they would want to keep it on guardrails and be more of a demo of the capabilities of the robots versus just the capabilities of AI, especially being the first outing. They didn't want to have an issue like with throwing a steel ball bearing at a window sort of scenario. But it came out and people didn't like that. So we'll see what happens there. I am thinking. So here we go. Earnings is tomorrow. Earnings is tomorrow after hours. Okay, after hours tomorrow. One thing to keep in mind is that if you're trading options leading into the earnings event of Tesla, something that you really need to keep in mind is the IV, the implied volatility. That could be a major problem for you. Like, let's say if you just wanted to do an overnight, like Wednesday to Thursday, and you did like a 2-day trade on that one. If we go and look at the implied volatility right now, that's at 96%. All right, that is 96% right now. And if that falls the following day, which it will likely fall because that's an earnings event, it's a big volatility event. Once that's over, you're not going to see 96% implied volatility anymore. Like, for example, Netflix has had its earnings event, and their implied volatility for 3-day out contracts now is 27%. And when that implied volatility falls quickly, like after an earnings event, they call that IV crush, which crushes your profits no matter which direction you're buying. Even if the stock goes your way, it's got to really go your way for you to make any money. So be aware of that. Be cautious. I do not trade earnings. I'm not going to start doing it now because I don't feel like getting crushed. I will wait till earnings are over. I will wait to see if this is an island reversal or a continuation to the downside on Tesla. And then I will get in after I assess that situation. But before earnings, I am staying away from this thing, mostly because one, it's a little bit unpredictable. We don't know if it's going to go up or down. Elon could come out and absolutely crush it and send the stock flying up 10%, or he can be mediocre and have it fall, 7-8%. But regardless of what happens, if you're buying options, you're going to make a lot less money than you think, even if you make any money at all. And that will be because of the IV crush, because on Thursday, that implied volatility is going to drop to like 40-50% from 96%, and you're going to see significant decreases in the value of all of the options no matter what happens on the stock. So be aware of that. Do not get crushed. All right, so we do see that going into this thing, right? Here we go, my ribbons. I love these ribbons. This is great. So came in here, turned pink right there, started coming down. This one started turning purple, and it really started coming down. And now we're on our way back up. So this is looking a bit like, honestly, this looks like a bear flag, and we could eventually find ourselves even further down to 213, but we're also down at the bottom of the range leading into the day before earnings. So we'll really need to see what's going to happen tomorrow. I wouldn't be surprised if we close tomorrow somewhere like right around 220. This thing is going to do a bit of cliff hanging here and see if it's either going to drop or rocket up. And I don't want to touch it. It looks like it's absolutely preparing to do a huge move. I don't know which direction that's going to be, but it is coiling up real nicely here ever since the robot event, and it is not really giving any hints as to where it really wants to go after earnings. We're just going to have to wait. And I'm, of course, nothing I say is financial advice or a suggestion to buy, sell, or hold any asset whatsoever. I'm simply stating that I am staying away from this trade no matter which direction it goes until after the earnings. I want to see what those earnings are. I want to see how the market reacts to it. And I want to wait for that implied volatility to come down so I don't get crushed by it. Anyways, that is Tesla. And we're going to take a quick station break. If you're still with us, smash that like button. Subscribe if you've been with us a while and haven't done so yet. Check out the Trade Cave store link in the description as well as the channel bio. We've got some excellent products here for you. Also, do not sleep on the sticker shop on Redbubble. That link is also in the description as well as the channel bio. We've got some awesome stickers on there as well, and they are finally affordable. All right, let's move on to our Lotto plays. Lotto plays. So Luna. All right, so it got out of this accumulation zone that I said it would be in for a little while. It actually got out of it faster than I expected. Okay, now I have a very small amount of this. Very small amount of this because this is a Lotto play. This is not a fundamental play. It is a Lotto play. So I have a very small amount in it. And since getting into it, I am up 42%. Yes, 42% on a few hundred shares. So that's like, what was it, a couple $100 that I'm up? It is very nice. Okay. I am looking for this thing to, around Christmas time, be trading around between $7 and maybe $7.50. Maybe $8 if we're lucky. Between $7 and $8, somewhere between $7 and $8, I am looking for this thing to find itself in the next like 60 days. That is my thought on this. Now, right now, you can see that, okay, so we've got the stochastics here. The slower one's getting wider, the faster one's getting not necessarily wider, but not much skinnier either. You can see the momentum is growing here. So this is actually still looking very bullish. Now, if we were to pull back, it might be to the 5, and we might ride the 5 up from 420 higher. We have the ATR band up at 468, kind of holding us back a little bit, but we can stay in this type of trend for a while here. I mean, just look back here in June and July. This thing just said, to heck with the 5, to heck with the ATR band. We're just going right outside of it, and we're just going to stay outside of it for how long? From June 10th until June 25th, a whole 2 weeks, just completely outside of all of those technical indicators, and even outside of the fib band by the top of the fib band by a significant margin. Let's see how far this thing was off the top of the ATR band when it finally stopped. It went 50% over the ATR band. Okay, 50% over the ATR band in June. Is it going to do that again? And if it does, okay, let's see, where's the ATR band right now? Okay, and if we went 50% over the ATR band right now, that would take us to $7. Boom. So that's why I kind of have that in my mind. It's gone way above the ATR band in the past. If it does it now, I mean, if it just went above it right now without even dragging it up for a week first, we would hit $7. If it dragged it up for a week first, I mean, we did a move from, let's look here. When we started taking off here last time, when we broke out of the consolidation zone, we did a move of 300%, 296%. I'm going to call it 300. 296%, okay? 296%. So if we do that now, okay, and we're just going to do it from the bottom to even give it more fairness here. Sandbag it a little bit, 296. So if we did 296, oops, I got stuck there. If we do 296 from the bottom here, where would we be at? We would be at, get it? 290, okay, 297. We would be at $10.89. $10.89. So I'm looking to churn this thing to sell it anywhere between like $7 and $10. Honestly, anywhere between 7 and this figure I'm looking at right now, anywhere between there, I'm looking to start offloading this thing for the Christmas season. And then maybe I'll think about it again in March or April of 2025 for that very final Bitcoin blast off. That's what I'm looking at here for. So Luna. All right, Dogecoin. Let's talk about Dogecoin. Dogecoin is very interesting right now. Now you can see the stochastics are starting to curl over. And the big one, the slow one, is starting to close up a little bit. The momentum is still growing though, so if this momentum reignites and we start to see the fast stochastic start curling back over again to the upside, then this thing could continue up. But right now it looks like it's got a date with the 200-day moving average, which is currently at, man, I have so many things on my chart to the right, I can't even read that. Let me go ahead and remove drawings. There we go. It looks like it's at 12 cents and 12.873 cents right there. Okay, 12.873 cents is the 200-day moving average. It looks like it's got a date with that and will likely come down to cap it, or it may come up to meet us somewhere around 13.5, 13.4. I do have another order to increase my Doge position by 25% at 13 cents. So I bought in at 11. Right, you know that I originally set it for 10.9. It didn't come down to 10.9, so I bought for about 11.3. It is now at 13.98 cents. I'm expecting it to come down to about 13, where I will increase my bag by 25% on Doge, and then going forward, I would be looking for it to come again to the top of the fib band, which right now is at 21 cents. Right, I'd be looking for at least that this Christmas. If we go by previous Christmases, let's see here. Yeah, previous Christmases, how high above that fib band have we seen it before? Not terribly high above the fib band, just a little bit above it. Like, let's do a quick little measure here. At the peak, that was not quite the peak. Okay, we were about 6-7% above the fib band. Now, if we were to do that where it currently is, we're about 6-7% above it. Now, this thing will curl up and be higher than this now. But if it was just, let's just say for sake of argument, it doesn't move, we do about 6% above that, we'd be looking at 22 cents. So I would be looking to offload my Doge around 22 cents for the Christmas season. There is a possibility that it could go past the 22 cents, right, and come up to potentially even like 29, 30 cents. That would be if we got a really good Christmas rally. I'm not going to bank on it though. I'll probably let go of a significant amount of my Doge that I'm holding right now at around 22, maybe 21 cents. Okay, so that's something to keep in mind and what I'm looking at with Doge right now. But that would be a significant increase from where I originally purchased and from where my cost basis will be. There'll be 100% return in a couple of days, a couple of months. So that is actually significant, and that will work out for us there. Now, finishing off the video. So we're going to take a look at we're going to look at WULF. WULF, I don't know why it took off 18% yesterday. I could not find any news indicating why that happened yesterday, but it did. And look where it went. It went exactly to our target that we were saying, coming right for the highs. I was saying as soon as it starts curling up again, as soon as it starts closing above $5, and look, it closed above $5 2 days in a row, and then right back at $6. Exactly. Technicals work. Technicals work. It's important to learn them. And in fact, I'm going to probably start working on a series doing more to teach technicals versus just talking about them. So keep an eye out for that. I'll give you more information as I know more information about that. I'm working on it to develop some more instructional videos about how to do these technicals and how to make these calls yourselves. And hopefully from watching the video, you picked up these videos for a while, you've picked up some of this, but I want to be more explicit in terms of explaining things and being more clear about it. Today, CORZ. Watch out, CORZ. Watch out. So we were up 6.94% today on CORZ. That came off of the news that I believe they've got 500 megawatts of power that they have attributed for HPC now. So they're going to have 500 megawatts of power for HPC. If you remember our previous video for Cypher Wind Moon, I talked about a HPC only business that has about 100 megawatts of power, and they're worth like $1.5 billion. So this is 5 times that amount. So we would be looking at $4.5 billion of basically value just showing up for this company right now, and I don't believe their market cap is that much right now. I don't actually know what their market cap is right now, but that was just a quick explanation. That's why we got up 6, almost 7% today. But we are still doing this rising wedge. Okay, keep that in mind. We're still doing the rising wedge. We're riding the top of this rising wedge. What have we done every time we've ridden the top of this rising wedge before? We came right to the bottom of that wedge again. If we were to do that right now, that would basically only really erase the gains from today, and that's it. So it's not really a big loss or something to be really overly concerned about. But if we break this lower channel here, this lower line, this lower trend line, if we break that, we're coming back to 1087. So don't get super duper excited about this. This is exciting news, but I wouldn't be surprised to see it bleed off like it has pretty much, like every crypto miner ever has, anytime it's ever done a 6 to 10% day, where the next week that followed was down by that amount or more. So that's my expectation. Here a little bit on that, but it is still forming that rising ascending wedge, that rising wedge, and I wouldn't be super surprised if it did a bull trap up here where it rode the top line for a couple of days and then sold off below it and came back down to like say $12 and just scared everyone before reversing, or if things are actually bad for some reason, coming back down to 1087 before curling back up again. Anyways, that's all I've got for you today. Please like, comment, subscribe, share this video. Check out the Trade Cave store link in the description as well as the channel bio. Do not sleep on the sticker shop. Check that out as well. Link is also in the description as well as the channel bio, and have a profitable day.